Hi, welcome everyone. Welcome to our latest webinar. Together with me here today, I have Ihsan, who is a senior chartist from Maybank Investment Bank, to share with us his technical view on the US stock market as well as some of the US banking names. So I'll just give it a couple of moments for everyone to log on, join in, and just spare some time with us, about an hour, to let us run through you the technical perspective of the US market right now, and also the opportunities available to you as a investor in Bursa Malaysia just by using your local CDS account. Okay, so just give it a couple more moments. I see a lot more people coming in right now, and from there we will begin. All right. I see even more coming in now. I also like to thank all the viewers here today for taking your lunchtime, sacrificing your lunchtime to join us, Nick and I, here today. It's just gonna be an hour, won't be too long. So I hope you have your lunch already. And for those my Muslim viewers here today, Selamat Berpuasa. Okay, I think this is everyone. So once again, good afternoon, everyone. We are honored to have you join us today for this insightful webinar called Revealing the Trends. And I'm thrilled to be here with Nick Ihsan, who is a renowned senior chartist at Maybank Investment Bank. So before I go on any further, allow me to introduce myself. My name is Tucker, and I'm a proud team member of the Structured Warrants team here at Equity and Commodity Derivatives Maybank Investment Bank. So during this webinar, we will uncover the exciting investment opportunities in the market, and I also explore how you as investors can capitalize on them by just using your local CDS account. So our goal here today is to share our insights and expertise with you, and we hope that by the end of this webinar, you will be equipped with the knowledge to make informed investment decisions. So I will be leading the webinar for the next 20 minutes, where I will discuss the opportunities available in the market. Following that, Nick Ihsan will take over and provide an in-depth technical analysis of the US banking shares and the broader US market. So once again, thank you for joining us today, and we hope you enjoy the webinar. So a quick disclaimer: any decision to invest in structured warrants should rely on your own evaluation to assess the merits and risks of the investment in the structured warrants. If you're in any doubt as to the action or decision to be taken, you should consult your own professional advisors. So let's begin. Let's begin by asking yourself a few questions, such as, do you have a local share trading account, or seeking exposure to US market, or have small capital? So the first question is, if you have a local share trading account. So this means that you have a trading account with a local broker or financial institution that allows you to buy and sell shares of company listed on the local stock exchange. Secondly, are you looking to have exposure to the US market without the need of opening a foreign share trading account? This might suggest that you are interested in investing in US stock, but do not want to go through the hassle of opening a foreign trading account. So currently, there are several ways to achieve this, such as through exchange traded funds that tracks the US market, or through mutual funds that have exposure to US companies. And thirdly, you would like to invest in US stocks but have limited capital. So you may face this challenge as you want to invest in US shares but may not have a large amount of capital to do so. But today, I'd like to share with you that structured warrants can provide a solution to this. And thirdly, fourth, you may want to think about the financial sector crisis in the US amid the Silicon Valley Bank drama, or the Signature Bank, or even Credit Suisse. So this implies that you are aware of the recent fallout surrounding SVB and want to take advantage of potential opportunities in the financial sector in US. But it is important to note that investing based on short-term news and events can be risky and should be done with caution. And lastly, are you currently trading the S&P 500, Nasdaq 100, or even Dow Jones Index warrant listed on Bursa Malaysia, but you actually want to have exposure to specific shares instead? So chances are you are currently investing in these popular US stock indices through warrants listed on the Bursa Malaysia Stock Exchange, but one specific share exposure. So today I'll be sharing with you the warrants listed on Bursa Malaysia, which will allow you to gain exposure to the underlying shares with a smaller amount of capital. So with those questions answered, right, Maybank IB is proud to answer them with this listing we have tomorrow, as we are issuing a 3-pair call and put warrants listing tomorrow over New York Stock Exchange listed underlying. And in this issuance, the key focus is over the banking sector in US, given the March 2023 financial crisis, which was last month. So investors here today need not to worry, as the structured warrants listed on Bursa Malaysia, even over foreign shares are traded in Malaysian ringgit. So let's just go through, what is happening with the drama or financial crisis in the US. So the fallout of Silicon Valley Bank, SVB, had caused markets globally to be anxious and in jitter. So let's just quickly dissect the timeline of the fallout, all right? So on Wednesday, March 8th, the parent company SVB dumped USD 21 billion of portfolio securities and sold 2.25 billion of its shares. So this led to customers jumping ship as prominent venture capitals directed their startups to pull money out from the bank, and the bank bolts towards a run as withdrawals soared. So on Thursday, March 9, in total of 42 billion US dollar was pulled out by investors and depositors in one day. Okay, so this pushed SVB stock down by over 60%, with its bond posting record declines. And even with the bank on the brink of a run, the CEO urged clients to stay calm. And in just the third day on Friday, March 10th, SVB shares sink another 47% and trading was halted on the stock exchange. So this collapse triggered US banking sector rout in the S&P 500 Banks Index, as it dropped another 4.2% after a 6.6% slide the day before. So the Federal Deposit Insurance Corporation, FDIC, puts SVB in receivership. So what this means is that FDIC manages the bank's asset to ensure all depositors and creditors are paid. So now going on to Sunday, March 12th, Janet Yellen signed a resolution to say that it will fully protect all depositors, and the depositors will have access to their money from Monday onwards. And this is also in line with the Fed statement, where they say that depositor will have full access to all deposit the next day, regardless if it is insured or uninsured. So then on Monday, the next trading day, the UK HSBC has announced that it will strategically acquire SVB's UK branch for £1. And the Bank of England says that the deal means that all depositors' funds are safe. So despite that, and despite US assurance, startup in China quickly moved and transferred their deposit to other banks. And also, US President Joe Biden declares that the US banking system is safe, and it vows for stiffer bank regulation to better protect small businesses and prevent similar bank failures in the future. So in conclusion, the collapse of Silicon Valley Bank which is one of the 3 US bank failures in March 2023, has caused significant damage to the bank stocks and the wider financial industry and has led to a political blame game. There is no single answer as to why the tech lender collapsed, but some possible factors are the rollbacks of regulations during the Trump era, mismanagement at the bank, and also sharp interest rate rise. So federal investigations have begun and lawsuits have been filed. The reasons experts believe SVB failed include the Trump rollbacks, the bank's management, and the impact of inflation and interest rates. So as investigations continue, there may be further revelations that cause more concerns from depositors and investors. And one thing to note, this marks the second largest bank failure in the US history and the largest since the global financial crisis. And next, we have Credit Suisse. So just when the market thought that banks collapse in the US was enough, Credit Suisse, a bank with a long history, was not spared and had also fallen in March. So let's quickly go through the timeline of how it fell. And on Wednesday, March 8th, Credit Suisse delays its annual report because it received a call from the US Securities and Exchange Commission the night before the report was due. And in it, the SEC questioned the revision to cash flow statements from 2019 and 2020, as well as related controls. So on Tuesday, March 14, when it finally did release its annual report, Credit Suisse admitted to material weaknesses in its financial controls and announced an end to board bonuses. The news came at a time where markets were already fragile due to the collapse of SVB, Signature Bank, and one more bank in the US. And the market is trying to grasp the failure of American regional lenders. And what made matters worse was that on March 15, Bloomberg TV asked the chairman of Saudi National Bank whether it would offer additional financial support to Credit Suisse, and his answer is absolutely not. And this triggered a panic sale where the lender's shares plummet 24% by day end. And on the very next day, Credit Suisse shares rebounded because the Swiss National Bank threw Credit Suisse a 50 billion Swiss franc liquidity lifeline. But this only answered the short-term capital concerns, but not the major question where the market has is how Credit Suisse would stem the exodus of its clients. So on March 17, everything is in fact not fine because the Wall Street Journal reported that Credit Suisse recapped a week with daily outflows of USD 10 billion. So despite the Swiss National Bank throwing a credit line, it failed to restore confidence in Credit Suisse. And together with the Switzerland financial watchdog FINMA, it is brokering a takeover by UBS. And last, UBS agrees to take over Credit Suisse for a consideration of 3 billion Swiss franc in stock and agrees to assume up to 5 billion Swiss franc in losses. So this has caused 16 billion Swiss francs worth of bond being wiped out, and Credit Suisse 167-year history has come to an end. So recently as well, the top prosecutor in Switzerland has launched an investigation into the takeover of Credit Suisse by UBS, given concerns that up to 30% of workforce could be cut. So a senior manager at UBS as well has reported saying that as many as 11,000 Swiss employees and 25,000 worldwide could be laid off as a result of this merger. So the two banks employed nearly 125,000 people globally at the end of last year, with around 30% based in Switzerland. So these two are the major incidents that have happened last month, which has rocked the market globally. And now let's just take a look at the KBW Bank Index. So given that March was the month where financial crisis rocked the markets, even Bursa Malaysia Financial Index was not spared. So the graph that you're actually seeing is the KBW Nasdaq Bank Index, which is down 20.08% year to date. So this bank index is actually a benchmark index designed to track the performance of leading banks and thrifts that are publicly traded in the US. And this index includes 24 banking stocks representing the large US national money centers, regional banks, and thrift institutions. So why am I showing this? Is because this index is used as a barometer of the health and overall performance of the US banking sector and is closely monitored by investors, analysts, and economists. So, given the tumultuous month of March, Maybank IB has carefully selected 3 of the largest US banks based on total assets for our latest listing. And in tomorrow's listing, Maybank IB had chosen Bank of America, Citigroup, and Wells Fargo. So these 3 are in the top 5 largest banks in US by total assets, and is also included in the index mentioned earlier. So as key players in the US financial system and essential to the country's economy, these banks have been significantly impacted by scorching inflation, quantitative tightening, and recession fears, which has led to a recent downturn to their stock prices. So for those who are looking to capitalize on the bank's further downside, or those with a contrarian view that the banks will rebound, Maybank IB has issued call and put warrants pair over these 3 shares. So these warrants will allow you to have the opportunity to profit from the market movements at either direction. So in terms of the technical analysis part of it, I'll leave it to Nick to provide an in-depth technical analysis of each underlying bank to give you further insights and information to help inform your investment decision. So we hope that this listing and accompanying analysis will prove valuable to you looking to navigate these tumultuous market conditions. So with that being said, for the bullish viewers here today, here are the analyst estimates as extracted from Bloomberg. So although the performance has been negative thus far, the average 12-month target price of each of these underlying indicates a potential return of double-digit in percentage terms. So as you can see, out of the 3 banking share, Wells Fargo has the most buy calls, because when Wells Fargo reports its quarterly results for the period ended March 2023 this Friday, the market is anticipating that an increase in earnings and revenue compared to the previous year. So although this is a widely recognized consensus projection that provides an insight into the company's earnings outlook, the actual results will be a crucial factor in determining the stock's short-term performance. So if the actual earnings and revenue numbers exceed market expectations, the stock is likely to experience a surge in price following the earnings report, which is scheduled for release this Friday, April 14. Conversely, if the results fail and fall short of projections, the stock value may decline. So while the long-term sustainability of price movement and future earnings expectation is primarily contingent on management's discussion of business conditions during the earnings call, it is essential to estimate the likelihood of a positive EPS surprise. And now, we've already known what is caught in the crosshair in the US, what Maybank IB will be listing. So I'd like to share 6 advantages of using US share structured warrants. And number 1 is that you can leverage with no margin call. So structured warrants offers investors the ability to leverage their positions, which means they can invest a smaller amount of capital and gain exposure to a larger underlying asset. So this can potentially amplify returns, but it also increases the risk of loss. Secondly, low cost or lower capital outlay. So structured warrants are generally less expensive than the underlying asset that they are based on. So this means that investors can gain exposure to a high price asset such as a popular stock at a lower cost and profit from either direction. So given the call and put that Maybank IB will be issuing tomorrow, structured warrants can be used to take a long or a short positions on the underlying share. So this means investors can profit from the upward and downward movements in the market using call for upward movement while put for downward movement. And number four is that limited potential losses. Why do I say that? It's because your losses is only limited to the amount of capital you have put up, or also known as the premium you have paid for the structured warrants. So there's no risk of margin call when using structured warrants as a leveraged financial instrument too. And number five is that share replacement strategy. So structured warrants allow investors to diversify their portfolio by selling a portion of current holdings and replacing it with structured warrants to maintain exposure while deploying the excess for other opportunities in the market. And it can even act as a hedging strategy, because in order to protect your portfolio from adverse price movements, investors can buy a put warrant to protect against the potential decline in the stock's value. And lastly, using local currency Malaysian ringgit. So structured warrants are traded on Bursa Malaysia Stock Exchange with a designated market maker. So this means that it's highly liquid and can be bought and sold easily during market hours just by using your local CDS account and Malaysian ringgit. So this provides investors the flexibility to enter or exit positions without the need for currency conversion. And you have heard the 6 advantages, so let's weigh the advantages and disadvantages of it in order to make a better informed decision. So in terms of advantages, number one is that just by using a local trading account, investors can benefit from lower stamp duty of 0.1%, capped at 200 ringgit, and brokerage fees are also generally lower compared to foreign trading accounts. And number two is that investing in Malaysian ringgit eliminates the need for currency conversion, like I mentioned, which can be costly and time-consuming. So this allows investors to gain exposure to top US listed companies with a lower capital outlay. And number three is that with Maybank IB as an award-winning active market maker, investors can benefit from the continuous bid and offer volume and prices throughout the market hours. So the availability of live matrix also promotes transparency, allowing investors to time their entry and exit points more effectively. However, for the disadvantages is that investors need to have access to US market research or have a good understanding of the underlying asset to make informed decisions. And number two is that investors must be aware of the difference in time zone when investing in US listed companies, because structured warrants will only be traded during Bursa Malaysia time zone, which is from 9 a.m. to 12:30 p.m. and for the second session, 2:30 p.m. to 4:45 p.m. So this may cause some inconvenience for some investors. And number three is that investors must be aware of the time decay factor when investing in warrants. This is because there is a one-day lag effect, meaning that the warrant price the next day depends on the US shares closing price the day before. So this may make it challenging for some investors to time their entry and exit. So I'd like to mention that also US share structured warrants are similar but not identical, because with structured warrants listed on Bursa Malaysia, investors can gain exposure to US shares, but instead of buying just one lot where it equals to one share in the US, structured warrants follows Bursa Malaysia minimum lot size of one lot equals to 100 units. And also, like I mentioned, structured warrants on Bursa Malaysia are quoted in Malaysian ringgit, whereas the US shares are quoted in US dollar on their respective exchange. And lastly, I have to stress this because this is an important thing to note, is that the underlying price that will be made reference to is the day before. So for example, tomorrow is Wednesday, the listing will be available in the market. The bid and offer that will be quoted on the market is made reference to the closing price of the US shares tonight, which is Tuesday. So for some of you here today, it's good to note that some of the key macro events that will be happening this week. So the Bureau of Labor Statistics is set to announce the Consumer Price Index and core CPI for March on Wednesday, which is tomorrow. And it is expected that the CPI will increase by 5.2% from the same period last year, following a rise in 6% in February. So for core CPI, which excludes the volatile food and energy prices, is projected to increase slightly to 5.6%, up from 5.5%. And also in the same vein is that on Wednesday, the FOMC is scheduled to release the minutes from its monetary policy meeting held in late March, during which the central bank official increased the federal funds rate by 1/4 of a percentage point. So these are also key macro notes for you to note, especially when it comes to US share structured warrants. So here is the list of shares, structured warrants that we will be issuing tomorrow. And we are proud to present it to you here today, as the viewers here today are getting the first dip into the names that Maybank IB will be issuing tomorrow. So for the US shares, we have the 3 bank names, which is Bank of America, Citigroup, and Wells Fargo. And Maybank IB is the first for the call and put for Wells Fargo. And also, we would like to highlight that we are the maiden issuer for IT Max as well. So you don't have to screenshot this because the slides will be uploaded onto the website later, where you can find it under the Education tab at the Deck and Slides tile. So with all that being said, as I close my session, we are going to have a quiz campaign to test your warrants knowledge. So this is in conjunction with the US share structured warrants listing, where the quiz will test you on the pointers that I've shared with you today, and winners will stand a chance to win GrabFood vouchers worth 50 ringgit. So allowing you to treat yourself to a delicious meal after learning more about structured warrants. So thank you very much for your time and attention. I'll hand it over to Nick for his in-depth technical analysis.
Thank you very much, Dr.
All right, thank you.
Hi, Assalamualaikum. Good afternoon, everyone. Selamat puasa. Thank you very much for joining our seminar session today. All right. As Taka mentioned, for my session, I will, what we call that, do a technical assessment for major bank, particularly the warrant that being listed tomorrow by Maybank Investment, which means I will cover Bank of America, Citigroup, and Wells Fargo. And then beyond that, I will go through looking on the outlook for the US market. Perhaps we want to revisit our view on VIX, on SP 500, and even let's take a look on the Dow Jones and Dow Transportation, whether the market in general is actually pretty much on the downward movement or still have more room to go. And then if we have more time, we're going to take a look at a few big name stocks like Tesla, Nvidia, Apple, Microsoft, Meta, and AMD. And then I also would highlight some of the name that we I would say highlight in our technical report. If you're aware, we have an additional report called a Global Traders Almanac, whereas we highlight the trading stock for both Hong Kong and US market. As per yesterday, we have 6 trading idea. As per last week, we have 4, so total up to 10. Maybe perhaps we have one to revisit to see how they perform so far. Now, as an investment analyst, licensed investment mean, and today's session is going to be purely from the technical perspective. I will not cover on fundamental. So that means all the view that I'm going to put later on will be perhaps I would say pretty much going to be backed by the technical justification. All right, now let's take a look at the first one. I'll be using TradingView. I think if you're familiar with TradingView, it will be much more easier. Right, so let's take a look first, Bank of America. Now, when I mean in-depth, that means I will go through perhaps across multiple time frame. We're going to cross-check with numbers of the indicators and perhaps highlighting which level that actually is interesting to buy, to sell, and so on. And perhaps later on, when you have more idea how the trend going to pan out in the near term, you may want to buy the call or the put warrant depending on the what we call that the direction of the stock. Now, let's take a look. This is Bank of America stock. I'm using weekly chart, by the way. So the first thing that we want to know is the trend. So by the trend itself, when we want to highlight the trend, is either by using a simple moving average or we just follow the market structure. So as for now, the market structure, if you've seen since 2008, it was pretty much on the uptrend. Right now, the thing is, since I would say since start of February last year, it has been on decline. Yes, if you recall, last year was quite bad year. S&P 500 dropped about 30%, and I think the rest of the market also not doing so well, particularly in despite of the higher interest rate being by Fed. Now we are entering the phase where the Fed itself could actually has of something that we call a terminal rate. That means there could be another 25 basis point hike before they're going to stop altogether hiking the rate. And perhaps if you look on the Fed futures rate, it was start to price in the possibility of the cut, interest rate cut as early as September this year. But nevertheless, that's still pretty much within our market speculation and expectation. But regardless, right now, if you look on the number of CPI, the number of CPI is actually improving, but it's not as fast enough. Now we are entering a phase where the Fed cannot do too much aggressive hike, because if doing so could harm a lot of the what we call that banks and so on. And in the same time, if they're not doing enough, the so-called inflation could actually drag the whole economic into much more deeper recession. So we are right in the middle of nowhere. So later we're going to take a look on the reading on the SPM. But for bank stock right now, particularly at Bank of America, if you look right now, the trend is still pretty much on the downtrend, I would say, in the near term. Now, if you look on the weekly chart, the latest trend structure is has been showcasing some sort of the what we call it a lower support breakout. This is the critical support sub at USD $30, and you have a gap down movement right on the as mid-March earlier, I think. And but the so-called selling pressure here was high, but you do notice that the candlestick here is not as big as here, as here. So often when you see something that kind of major breakout move, the candlestick has to be often to be rightly similar. We mean quite big. I mean they're going to create a Barbosa. Granted, that's either bullish Barbosa or bearish Barbosa. But the size of candles here, it does quite small. So I mean they can tell us only one thing. That means all the selling pressure that has been accumulating within $27.28 over here has been absorbed. There are significant enough buyers who actually start to step in within this current level. Now, let's take a look on the using Fibonacci. I'm going to draw Fibonacci for the body of the lower candle on the February 2020 all the way up, okay, over here. And if you notice the so-called the lower breakout here, this also occur within a 61 point of Fibonacci region level. Now in Fibonacci, I have some variation. I call it 72% ADW line, which is follow my Tok Guru Arwah Abdul Wahid Jantan, and I often use this so-called line as one additional fail safe or additional parameter to double check whether an extreme reaction occur at this level. Because over the years, when I observe the market, particularly when you have a massive sell-off or massive goes up or not, the extreme reaction often will occur within two levels. One will be at 61.8 of Fibonacci level, and another at 72% AW line. So as you can see here, there's number of rejection occur within a 70% AW line. And if you want, you can draw another fractional of Fibonacci, taking by the low of the Fibonacci baseline at 100 point up to the 61.8. So we call it a fraction Fibonacci. So you get another range we should be have between 38.2 and 61.8. So that means you have a new range of the support. As for now, it does look like the stock is appear to be supported right within at 26 US dollar. Now, despite so-called well supported, the thing is it did not showcase a rebound too. They mean the rebound that come in, I mean you see over here, there is the lack of the follow through. That means all the buyer that absorb the so-called selling pressure over here has no follow through. As for now, the trend for the medium term is still pointing downward with the chance to trade much more on the sideway. Now let's take a look the view from the what we call that smaller time frame. So on the smaller time frame daily chart, is there any significant reversal signal? Right. So if you look on the daily chart perspective price movement, the so-called gap up on the 27th March did not follow by what we call it significant change in terms of the trading volume, which means the trading volume is actually getting decreased. That means much more lower. So that means as the price rebound, you have a lower trading volume. So this could be signaled as a dead cat bounce. So that cat bounce often follow in terms of the when the market is on the rebound, but on the lower trading volume. That means the buying interest, which seemed as strong at first, start to diminish as the time goes. So that means there's no follow through, there's no continuation, and there is a certainly lack of the consistent or persistent buying interest to kickstart a new upcycle for the stock. So what you're seeing here is a classic is either the bear trap or it's a classic dead cat bounce situation. Now, perhaps if you need some color in terms of the momentum, let's take a look the reading based on simple indicator. So we overlay with the stochastic, Bollinger Band, and MACD. MACD is pointing up, stochastic is pointing down, and interestingly, the Bollinger Band, in fact, has started to contract. So when the Bollinger Band start to contract, that means the volatility, you see a bigger movement here, going to start to squeeze. So that means the price movement going to be much more tight. That means the stock most likely going to start inside the so-called tight range bound before they're making a move. So this is pretty much normal when you see what we call that the breakout move earlier on the bigger time frame, which on the weekly chart. As for now, my expectation for the stock, it could actually go pretty much on sideways and perhaps later retesting the upper resistance again. Failure to do so, particularly to test the critical level as 30 US dollar, could actually place back the stock into what we call that prolonging downtrend movement as for now. So there are I would say $30 is pretty much critical level to look at. On the weekly chart, momentum you see improving, but for now, this yet to be validated unless the immediate resistance at $30 going to be take out. So if we've seen the solid candle over here, then here you're going to have a much more stronger signal, and then perhaps it could see much more stronger rebound. Regardless, the trend is still pretty much on a downtrend. In the only way that the stock going to turn their so-called the major downtrend movement if they can start to create a new higher structure right above at $34. Now, when I mention it, does it mean that we want to wait for the stock to turn bullish first to buy? Well, you can do that, but you're going to miss out the large chunk of the movement if you want to wait until there is a pretty much confirmation. That's why in technical, what we see whenever you want to make a decision, we always take a look on the risk side. So that means if you want to buy, how much you willing to risk? That means if you're looking to buy at the current level, let's say at 27.5 US dollar, your risk it should be less than $2 kind of movement. I mean, if the price drop below $2 movement or at $26, I mean there's a decent chance for the what we call that for the downtrend to continue. But regardless, if the stock at current level goes up beyond $30, that means it could test in the net resistance at $34. So that means give you a significant attractive risk to reward ratio with the risk about $2, for example, and with the potential gain up to $8. So that means about to $7. So that means you are risking about $2 to get at least additional $7 payment. So this can be interesting. However, please recall that there's a plenty resistance lies within this current zone. Take a look on the volume profile over here. There's a significant chunk of the what we call that volume have been trusted within this certain price range, and you can see here the spike within at 32.7 $34. So this is actually some sort of confluence that is resistance can be much more stronger. So I mean, if you draw a simple Fibonacci tool from the top over here all the way to the low, you have a confluence exactly at the same level, whereas there were the strong a strong volume profile within at 32 and 34. It actually has a confluence within 61.2, 61.8 Fibonacci level and 72% LDW line. So that means the major resistance lies within this particular level. So for you who want to buy, I think any sign of the rejection, particularly occur within 32 to 34, is actually a good sign for the exit. All right, now that's for Bank of America. Now, to recap, I think for Bank of America, while technical rebound is still possible, for now you can expect to see much more consolidation as the stocks try to build a new baseline within the current support level. All right, if this level been taken out, so what's next? If this support is broken, the next support, if you're seeing here, it should be right within this gap here. So that we are looking at within at $23 and $21. So that means there's a significant downside risk still pretty much going to pay out for the stock. So be on mindful. Short-term trading is possible, but long-term, I would say stay pretty much in down cycle. Now, let's take a look the what we call that Citigroup. All right, for Citigroup, now I'm going to change into plain again so that we're going to make our so-called analysis based on purely on the price first before we testing with other indicators and so on. So in a nutshell, the stock price is still pretty much on the massive, I would say, range bound for the past few years. Even during the recovery in the COVID, it has failed to lift the stock beyond what we call that. I would say here, it just briefly goes above $70, but continue to be stuck sub at $42 range. Now, if you draw Fibonacci, simple Fibonacci from the low here all the way to the top here, the stock has been trading way below this range. And I would say if I add a fraction of Fibonacci at this level, there is a confluence right within 38.2 Fibonacci level and 61 of the fractional. So that means the major support seen as actually at $42 and $39. Now, I do like the shape of the price movement over here. You are seeing a potentially a complex inverted head and shoulder kind of pattern, but those patterns again are not valid as long the neckline remain there. That means in order for the pattern to be valid, they need to break above the neckline in order to reverse the so-called down cycle. As for now, it does look like it could has some sort of the rebound, but you seen over here, this can serve as right or we call that a strong I would say marker for the indication that our trend still pretty much on downtrend. Now, if you draw a trend line over here, you still get pretty much 3-point trend line, 3-point trend line over here. So this still maintain that the downside risk is still pretty much downward. The trend is still down. What they're doing is actually the stock could actually stage a rebound. So is the stock is actually has the so-called enough firepower to go higher. So let's take a look the reading on the daily chart. So on the daily chart, you can see the structure of the reversal move much more meaningful, particularly when you see the so-called hammer pattern on the 24 March over here was followed by a solid gap up mode. So this gap out can be considered as the breakaway gap, followed by another runway gap. The subsequent pullback over here did not even close below the what we call that the gap. So that means the structure here is then much more positive. I would say Citigroup does look like promising in terms of their trend structure. Short term, it could actually retesting the immediate resistance right at $50. So why 50? If you draw a trend line earlier, you get 50 right within this zone. Now, if not, then you can do a simple Fibonacci level right within at 52.4 over here, all the way to the low, and you get the zone should be over here. Now let's overlay with the what we call any sort of indicator. Let's take a look at the volume profile reaction. There you can notice a significant spike of the trading volume over here. This range sub $45 could indicate a so-called what we call that a support or buying interest heavily skew within at $44, $45, and stronger resistance right within at $50. So that means the stock again going to be trapped inside the so-called consolidation range. I mean, if the stock trade below reading at, let's say, 43, 44 is very interesting to buy. And if the stock going at 50 US dollar is a level where you should be looking to sell. Now, the problem is the stock right in the middle. So should we buy? Should we sell? So if you still want to buy, the risk that you can take is reading at 45.3, which is the recent low. I think it's still quite near. And if you take a look, the reading on RSI here is quite interesting because RSI, if you draw a trend line over here, is it going to break? Not yet to break, but here, I think that will make it interesting. So you see a consolidation pattern over here. So that means momentum, take a handbrake, building a new base, then suddenly you see a surge over here. So new high low structure on the side, followed by a solid breakout move over 2 moving average over here, which represent by 9 and 45-day moving average, which follow at least short-term and medium-term kind of the moving average for the RSI. So that means momentum here is gearing up for more, which put the stock into what we call that at the, I would say, bigger possibility, a stronger possibility that it's going to re-challenge this level at $50. If this level is being taken out, the next resistance target should be lies within at 53 and a half and 56 dollar. So as for now, if you want to buy, the trade is actually at 46, sorry, at 46.5. Your risk should be I think it should be about 1.5 US dollar, with the upside could actually hit at least $4 to $6 at least in near term. So that means it does look quite promising in the for short-term trade. So does US market still have more room for further recovery? If you look later on, I think it does look quite promising, at least in near term. Now we're going to look at SPI later. So to summarize, Citigroup versus BAC, I would say Citigroup much more looking quite attractive in terms of the how far the stock can range. BAC have more room to go, but in terms of momentum, Citigroup definitely leading the way. Now, last but not least, let's take a look at Wells Fargo before we really look more on the macro side, S&P, Nasdaq, and so on. Now, let's go back on the what we call that. Okay. All right. So Wells Fargo, long-term structure is quite scary, I would say. There are similar pattern occur during the global financial crisis back in 2008, and the similar pattern occur during COVID. I mean, in terms of the structure, I think let's change this to the log chart. Let's see how no, financial crisis in terms of the quantum of change is far more, I would say, devastating versus during COVID time. It's still more or less similar, but the quantum is much more bigger during financial crisis back in 2008, 2009. Now, back into the current stock price. On the weekly chart, you are seeing some sort of the interest coming in right within a key support level. The support here, you can see multiple rejection. Take a look at the candle. There's a number of candles which get a long tail over here and followed by the successive rebound. So that means this level, it can be considered as immediate support. So let's draw if this actually occur within the key Fibonacci level or not really. So yeah, I would say still within 50% Fibonacci. Often in terms of the long-term structure, often the price stage a stronger reversal move within 61.8. There are a number of times that I misanalyze, which means I get too excited when I saw reversal signal at 50%. Number of index like Hang Seng last time, and they are the big one. So initially the reversal move within 50% was not deemed strong versus at 61.8, but it does not mean that we cannot take it as a good reversal signal. As for now, the only thing that I would say rebound within $36 look good. But the level that they are actually stage reversal with the 50% is not looking that embarrassing. I know it just briefly approaching 61.8, but there's no significant change at 61.8. That means my support should lie at $34, which means still pretty much intact. I mean, any failure for the stock to goes beyond this level could actually put the stock back into what we call a downtrend movement. Now, there is a quite interesting draw here. So this is the trend line earlier. first trend line, major first trend line been broken. Then we have a revision of trend line, number of revision, and now we get a new one here and here. So this is interesting. So the rebound here could actually be seen as a so-called technical rebound, whereas the structure is pretty much on downward. So that means if you draw a Fibonacci level right within this zone, you will get 61 point, right within the previous uptrend line here, now turning into resistance. They mean the upside for me, it could be kept. Particularly within at 44, 43, and for 43 and 43.5 US dollar. So that means a room for the upside, it could be kept. Now let's take a look on a smaller time frame, how the reversal signal would be. Now, let's using different kind of the what we call that indicator. I think this one you cannot get read too much. I'm not going to opt for the what we call that trend kind of thing, because definitely there's no trend for the past few months. It's pretty much trendless on the sideways. So we're going to put a more focus on the range kind of movement. So that means Bollinger Band and stochastic kind of movement. Right now, so while it's redrawing our chart over here, so let's take a look. So the good thing, the successive rebound that occur on since 27 March is actually has kickstart a new upcycle. The stock now trading above the middle Bollinger Band. That means the trend shifted upward, was backed by positive in stochastic. MACD also positive, but yet to break above the so-called the zero line. Trading volume improving. So that means for the stock, it does look like compelling. And if you look using the so-called what we call that volume profile, they are quite heavily skewed right within 42 to 44 US dollars. So as we draw the Fibonacci level earlier, we know that 44 to 45 is actually a stronger resistance zone. But here it does could start as early as here as 42. So be on mindful if you want to buy your risk. Let's take a risk to ratio. You have 3 candle over here, 1, 2, 3. Definitely 3 white shoulder of pattern. So that means it's a bullish candlestick pattern. If you're buying at the current level at 38.6, that means you are risking over $2 to get a potential of another $2 to $4. So that means I would say in terms of the trading, it does not look that compelling. That means if you want to buy, I would say you'll be rather looking for the sell in this zone, because this zone is considered much more stronger resistance zone. That means if you want to buy, you have to go into much more smaller time frame to seek your stop loss level. That means much more comfortable and better stop loss level, because you don't want to get stop loss level too far. If you get some sort of the what we call that pullback, going to take up a lot of the what we call that your entry. As for now, I think if you want to go, I think it should be best to look on the small time frame. But for now, technically it does look like a technical rebound with the upside could be kept within 42 to 45. So as for tree band over here, the strategy that we can focus, I think the synchronicity that we seen here, there's more room for further rebound. But the trend, at least on the long-term trend, is still pretty much on downward. That means unless there is significant change into our overall trend, as we highlight BAC at $34, Citigroup at $50, and Wells Fargo right within at $44. So this is pretty much key resistance level, which means if those levels not be taken out, or you see a rejection, or you see a number of the reversal pattern in terms of candlestick and so on, so that is the level that you should think to close your profit if you have any. If not, I think looking on the trouble trend is still pretty much down. Now I want to move up into overall market sentiment. If you look on the market sentiment, this is, I think, yeah, seeing a SPF right now. Let's take a look at the week. We did highlight the week index, how the week index spike earlier could put us back into what we call that higher volatility of the environment. And it did go briefly, but we did also mention that a significant major resistance for week index right within at 34 to 37, which means any spike of the volatility could be kept within this zone, because this zone has been respected for the past 2 years, 3 years. That mean bar any event which has severity beyond what happened in the COVID last time, then perhaps it could goes beyond that. But for now, even as scary as the banking crisis and so on, as you can see, the volatility reaction was not as high as reaction during the COVID. Now, I am the firm believer that the market is actually discount everything, which means whatever the news, whatever the announcement, whatever development in the market right now, our reaction has can be seen. The volatility of the market can be perceived by looking at the chart over here. So as scary as a banking crisis will be, you see in the spike on the trading volatility over here is not even hit the major resistance yet. So, and in fact, the volatility has turned back below 20 points. So that means it's quite low volatility. That means when the volatility is this low, it often give a room for the broader market to recover or rally further. So if you look on the trend for SPI, it does trying to create a new higher structure. New lower structure was there already, but new higher structure is pretty much there. The moment they create a new higher structure, that means the trend, which previously short-term bullish, could turn now for medium-term, turning much more positive. So as for now, if you look on the volatility for the what we call that VIX index, it does pretty much going to be on the range bound. So if you look at the reading my Bollinger Band bandwidth over here, there's a significant spike over here. That means it's going to start in the contraction and there is a breakout movement, but the speed of the breakout movement was there's no follow through. That means the Bollinger Band now is back into lower range. So that means the change of between two wider upper and lower Bollinger Band is going to be remain on the I would say type. So as for now, momentum or the volatility is pretty much going to be on the sideways, at least near term. Now, back on the S&P 500, if you go during our market outlook, we did highlight that S&P could stage a correction first before continue. And if the stock did not break the earlier support, that means there's a plenty of room for further recovery. So what we see here, the earlier downtrend trend has been taken out. The index has goes up, coming down, and did not even create a new lower structure. So our support at 3765 has been respected, and now it does look like to go up further. So reading on the momentum over here, okay, as far as we concerned, all the banking crisis, I'm not mentioned, I don't mean that I want to downplay the severity, what could happen and so on, but when we look on the chart over here, the demand is there, the interest is there, the so-called the trend is there. That means short-term trend now about to turn much more positive. So what you seen over here, another breakout over 4,200 could actually start a new upcycle for the SPF and could put stock back into what we call a stronger footing versus as per last year. So if you seen the trend, whereas the Fed could actually hit so-called a terminal rate of interest rate high, and if they start to cut, that could boost further for the equity. But for now, it could be prolonged. The inflation still real. The number is still there. There's the thing on the street not exactly good. But again, during the bad market, during market is at the low, is rare to get a good news, right? We often seen a very bad news at the market when the market doing bottom and so on. So if you recall what Jesse Livermore said, when the blood in the street, that's a good time to buy. So right now, are you seeing the blood? Previously, for the past few weeks, we have a little bit hint for the blood, but as for now, there's not much in it. So for me, if you use purely on technical, I would say short term does look like promising. Okay. However, let's take a look. The key level relies at 4,200 to 4,320. So I mean this 61.8 of the Fibonacci level. I mean inability to break within this level could put the index back at the risk. Our major support still lies at 3,200. I'm not sure how long is it going to test or not, but for now, the only reversal that occur is right within a 38.2 Fibonacci. So that means will be a short kind of correction. So if there any major correction to come, the major reversal signal should be occur at 3,200. For now, SPI does look like quite promising. You can see the momentum is still pretty much okay. The trend is still pretty bullish territory, so we're expecting could test the immediate resistance now. Now, how about Nasdaq? Nasdaq, another similar story. Now, with the interest rate no longer being seen as the going to be much more aggressive, so that means they put the stock back into a favor into tech stock. That means there's a talking in the town, whereas it's a good time to sell the bank and now back into what we call that in the tech stock. I think the trend could be seen even in our local market, tech stock back in the play. So the problem is if the play was backed by the stronger recovery earning or not, but on the technical side right now, it could actually continue. Now, there's a kicker. You are seeing a divergence over here. So that means you're seeing a lower high structure for RSI, but Nasdaq create new higher high structure. So that means that's not good. So that means any upside move right now, I think it could be kept. Support, resistance should be strong at 13,650. So it could put the stock, so the index back into consolidation mode, as long they did not break so-called the immediate support at 11,800. I think as long they just create a new higher structure, then the prospect for further upside is pretty much there. All right, now. Okay, so in the nutshell, I would say VIX start to ease down, SPI have room of recovery, and Nasdaq also could actually stage some sort of the pullback first before testing the upper resistance level. Now, I think while the time is pretty much short, let me just re-highlight a few more before we open for Q&A. Now, let's take a look this one. Let me just take quickly look for Dow Jones Industry Average and Dow Jones Transportation. All right, both index has been used as a barometer for Dow theory. So that means if both index goes up, overall market sentiment is good. If both index is turning down, both market is actually on the downward side of movement. So if you're seeing right now, Dow Transportation is still stuck below the 200-day moving average. Meanwhile, the Dow is actually above that. So there is a certainly lagging kind of effect on the transportation. That means in order for the market to confirm to be higher, I would say few more percent, maybe 5 to 6% movement above the 200-day moving average for both what we call the index over here could validate that the trend has started to shift upward. So that means right now, Dow Jones is up, but Dow Jones Transportation is still stuck in this consolidation range. That means if both index turning up, that means it fit that the overall is start to recovering. For now, I say there's no strong signal for the new bull market yet. For now, I think it's more like gradual and recovery. It can be short term, it can be minute term, but I think rather than turn pretty much gung-ho, turn pretty much bullish, I would say we approach it more carefully. I mean, by assessment doing on the chart and so on. If there any significant change chart, we update our view. As for now, short term does look like promising. Now, quick look on the few stock, like the major one, Tesla, trading at the support level, could create a higher structure, momentum yet to improve, but could re-challenge the 200-day moving average again. Nvidia has certainly set back a little bit, but still continue to trade above 20-day moving average. Apple, similar pattern with Nvidia, stay going strong. Momentum start to ease. Be on the mindful. Trading volume also little bit on the lighter side. I'll say it still could continue to trade higher, but the pace could be much more slower. Microsoft has created some sort of weaker price action over here. Yes, we have big motherboards over here, but trading volume not yet convincing. So that means this, if you convert into what we call that weekly chart, it does not looking that it's okay, but it's not that impressive, particularly when you have a quite small body versus that long tail over here. Now, on Meta, uptrend still pretty much intact. No major signal yet, while AMD could extend the ongoing gain further. And let me just quickly look. This is the stock that we highlight last week and this week. Comcast doing quite well, still doing quite okay. Cisco too, trading above our moving average over here. Mastercard also the pullback that we expected now about to reverse again. Visa also pretty much intact. And we have two Hong Kong stock. I think not going to mention much here, but Align is actually doing better last night, about to break our triangle pattern neckline. Baba still holding quite well above 200-day moving average. NTU, the inverted, the massive cut handle still in play, but they need to break above 457, which is going to take quite some time. But because I think this is quite massive cut handle kind of pattern, so that's why we highlight the stock. Last but not least, will be Ziotis, also has break above the triangle and heading toward our technical target, at least in term. All right, let me summarize again for the stock that we cover. BSC, Citibank, Wells Fargo could stage a rebound short term. That means you can take advantage by buying call warrant. And if the stock showcases what we call that reversal move, particularly the level that I highlighted earlier, perhaps it's a good time for you to buy put warrant, or close the position and buy put warrant. That could be one of the idea. Anyway, the strategy is I leave it to you. But as for now, I think technical rebound short term for banking stock could does look promising, but the structure for long term is still pretty much on an downward. All right, be on the lookout for any significant change in the market. As for now, I think the market has more room for recovery, at least near term. All right, let's open up for the Q&A. If you have any question, feel free to ask.
Yep, let's just open it right up to the Q&A for the people here. Thank you very much, Nick, for the in-depth analysis over the banking names, as well as some of the US names such as Meta, Zotis, who also, that have technical uptrend, right?
Yes.
Okay. Are there any Q&A from the floor?
Ahmad Cheah, selamat puasa. Yes, selamat puasa.
Yeah.
Selamat Cheah.
But okay, I think we have run over by 5 minutes. But if there is no question from the floor right now, feel free to email warrants@maybank-ib.com if you have any questions about structured warrants or even technical analysis question, and we will relay it to Nick and we'll have it answered for you. Okay. Anything you like to add on before we close off, Nick?
I think we are seeing a lot of volatility for the past few months. Now, as the market start to come, perhaps we want to revisit again. I think local market those could have more room to recover, because trading as support. The overseas equity market, I mean US in general, also stay on the recovery mode, but we still be on the lookout if there any major change, the appearance of the black swan event and so on. So like I mentioned, if the certain index or the index approaching the critical resistance level, if there any sign of the reaction or weakening, then I think that could be one of the reason we can be more cautious. And I think in terms of the trading, I think short-term trading, it could be much more advisable for now, because there's still pretty much a lot of uncertainty. So short-term trading, I think because you can control your risk, I think will be much more applicable, at least in the near term.
All right. So thank you very much, Nick. So uncertainty in the market, so that means short-term trading. And if you are looking to trade in the short term, but you don't want to have too much capital at risk, you can always consider the structured warrants as listed on Bursa Malaysia by Maybank IB. And also I see one question is, can we view this webinar session later? Yes, you may. This webinar is recorded and we will upload it onto our Warrants website shortly. Okay. And I guess that's all from us here today. Thank you very much, everyone, for taking your time to join us over lunch. And thank you very much to Nick for doing this with us. And hope you all stay safe and take care. Thank you. Bye-bye.
Okay, guys.